Welcome to the Succession Podcast, a podcast by Lane Brothers Investment Counsel. Follow a founder on his journey to successfully transition his 3-decade-old practice to the next generation of advisors and clients. Investment advisory services offered through CWM LLC, an SEC-registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors. Welcome to the podcast Succession, hosted by Lane Brothers Investment Counsel. I'm Megan Lane, Associate Wealth Advisor and Director of Operations. I'm joined by
Kevin Lane, Founder, Senior Wealth Advisor.
Joe Allen, Wealth Advisor.
And today we want to talk about a little bit of the progression of our firm and how things have changed over time, as it started as a small family-run firm and as it's grown and we've expanded our services to offer our clients. So Kevin, why don't you give us a little background on how that growth has happened?
Thank you. Yeah, it's really interesting to reflect back in 1990 when I formed Lane Brothers. We were really a conventional stock and bond house. We did our own research. We tended to lean towards the value contrarian camp of methodology and discipline, and that's really kind of took us through most of the 90s. And then as the industry has evolved, I think to stay relevant and competitive, and as clients' needs expanded, we needed to also adapt to the changing environments. So what started out as a very sort of simple stock and bond management, flash forward, we added financial planning back in around 2010, 2011. One of the things that was concerning to us was some of the aspects of how stocks and bonds were now trading away from the traditional exchanges, high-frequency trading. The systems had changed. Inevitably, maybe not for the best, but sometimes you just can't stop the momentum of technology. So it forced us to broaden our scope of looking at things like mutual funds and then later exchange-traded funds, ETFs, et cetera, to be able to insulate the portfolios from some of the other problems, the way the stocks were trading, the way the bond market had a disruption. There was federal legislation that took the banks out of the bond market in a meaningful way in 2014, and that changed the whole structure and environment on the liquidity of bonds and the transparency of these tradings, et cetera. So we've had to be cognizant of the technology adaptions, and that brings us today where we have a kind of a concierge level of services that at the foundation is portfolio management, but then it expands into things like financial planning, asset protection strategies, coordination with tax specialists, and then retirement stress test, et cetera. So that's been kind of the evolution over 30 some odd years.
Joe, do you want to discuss a little bit about the financial planning aspect that's changed?
Yeah, so a lot is evolving in the space of financial planning. It's kind of transitioned from being this one point in time exercise where you get out of that meeting or several months later and you have your binder of this is my financial plan and this is what I'm going off of for the next however many years, to more of a fluid process. So certainly leveraging the technology and tools that are available to do this more real time, but also just the thought that this is not a one-time exercise. It's actually something that's done at least annually, but something that you want to dust off, because inevitably you do the best you can when you first put together a financial plan to think of everything that you can based on what you know at that point and make a bunch of assumptions. But then, things change. Life happens. The situations change. You need to be able to move with the change and make those adjustments more on the fly. And so that's a big change just in the space of financial planning in the industry. I think as a firm, as Kevin mentioned, we've chosen, it is a choice to have internal CFPs, certified financial professionals in-house, certified financial planners in-house, and versus, subcontracting it or kind of outsourcing it to another resource, just as a level of showing our commitment to the importance of financial planning. And so we've continued to do that, to have in-house CFPs that can do that real time. And of course, we have expertise that we can engage if more detailed, more complicated planning is necessary. Megan, how about on the operations side? How has that changed at a firm level and as a part of our succession as well?
Yeah, so it's been actually really interesting to see how quickly we've been able to adapt our operations. I've been with Lane Brothers just over 4 years, and just recently I was going through some old files of mine, cleaning up some old standard office procedures that we used to follow, and it made me giggle to just see how much we've grown from that. So much of the process used to be manual and take a lot of time, and we've been able to implement action plans that are keep us more accountable with timing planners on handling different operation sides. And we no longer have to run quarterly reports that we stuff into envelopes that takes a whole day and mail out, or take the first day of every month to do billing because it took an entire day. So we've just gotten a lot more efficient with that, which has been really exciting to watch.
So a little bit more of moving the procedures from Kevin's head to something that more than one person can be involved in. And not that your head is not efficient, but
That was a very wise move on the part of the rest of the team. The more you get out of my head, the safer you are.
Yeah, it's definitely been helpful for all of us to understand your thoughts and processes as well. So Kevin, do you have any thoughts on how everything's evolved a little bit as far as portfolio management from your perspective?
Yeah, absolutely. So, interesting reflecting on this. The first quarter of 1980, which is when I joined the Wall Street firm, the volume on the New York Stock Exchange jumped to 60 million shares a day. Now, this seems kind of ridiculous in comparison of the billions of shares that are traded today, but it was a big deal then and caused a lot of back office issues because there was not a lot of automation. It was still like a paper business, but that was a little prelude of what was to follow in the decades ahead, which was the volume and the trading and the mechanisms to accommodate the expansion of stock investing, not just in the United States, but globally. So that was a little precursor back in 1980, that volume was going to be a big characteristic. So today, when we trade billions of shares on a given day, strangely enough, the New York Stock Exchange often only does about 10 or 15% of that volume, which most people don't realize. So it's moved out to these other networks that are spread across the country and the globe, for that matter. So other changes that came down was decimalization. Prior to that, stocks traded with an eighth differential. That's 12.5 cents between a bid and ask. Now, there's a lot of profit in there for the market makers. Well, when the movement went to decimalization, now you got stocks that trade fractional to the penny on size and large blocks of tradable stocks, like a big cap growth stock or something. So obviously the institutions and the technology facilitated more trading, and then you have things like the high frequency trading. We don't necessarily like these things. We think it detracts investors and the focus on long-term appreciation potential and staying the course with investment thesis that are geared towards not trading but long-term investments to build wealth. And this kind of chaotic trading kind of detracts from that. And it's only increased over the last 15 years for sure. And not quite sure it really ever does get subdued. But those are distractions. So we've had to work around that. And today, first 3 decades ago, we utilize exchange-traded funds, a phenomenon that started about 20 years ago, that are superior in a lot of respects to mutual funds because they are lower cost, which is good for the client. They are as diversified. They trade minute to minute in the marketplace as opposed to the end of the day for mutual funds. And they're just more tax efficient because the IRS has just carved out separate rules for exchange-traded funds, ETFs. So we use those in place of individual stocks to get that diversification, have that low expense structure, and to focus on the tax efficiency, which I think helps to build wealth. So those are some of the system changes that we've had to adopt, and then adopt new technologies within the portfolio work.
Joe, do you want to speak to those technologies that we've adopted?
Yeah, so from a technology perspective, if you were paying attention to a couple episodes ago when I gave my background being from the technology industry for several years, technology is something I'm very passionate about, even though it doesn't seem like maybe it applies to financial services. It very much applies, especially nowadays with where things are at and where things are going. Part of our mission statement as a firm is to have thoughtful innovation, right? So we're not just adopting new technology and tools just because it's the latest, coolest thing, but because it's either going to add a lot of value for our clients, increase that value, or help us be more efficient or better at our job, which also adds a lot of value for our clients. And so, our technology strategy is really just making sure that we are certainly aware of how technology is changing, what's out there, what's available, how it can potentially improve the lives of our clients, help us be a better advisor on behalf of our clients, but also just structured, reoccurring due diligence on any of the tools or partners that we choose to work with, to make sure that we're continuously evaluating, not just looking at what's out there and maybe adopting new technologies, but evaluating the existing technologies and tools that we use to make sure that they are still appropriate for our objectives. A lot of work being done there. It is a technology world, and so it's important, in my opinion, for a firm to stay abreast of what's going on, how things are changing. Megan, what about on the kind of the area of the centers of influence or partners that we work with? How are things changing there? What are we doing as a part of our succession?
Yeah, so I think that we can all agree that being a financial advisor, especially nowadays, it's much more than just portfolio management. You really have to look at all aspects of someone's financial picture, and provide good advice and direction for them. And sometimes you got to recognize that there's people that are actually more skilled in certain areas. So CPAs, for example, we don't do taxes, but we definitely want to help with tax analysis. So we work really closely with our clients' CPAs. And we have people that we can consult with on more complicated matters, if it's more of estate planning or anything that we just think that we need to bring in more expertise to work alongside our clients with them. I think that's a huge direction that all firms need to consider.
Yeah, I do think it's a choice. And Kevin, you could weigh in terms of historically how and why you've chosen to kind of create some of these partnerships, because you've done this for years. But I do think it's a choice. Like, a firm can choose to be, not in a negative sense, but a one-trick pony in terms of, I just want to focus on portfolio management. And that's fine. And you probably do a really good job at it if that's all you're focusing on. But I personally believe, and I think that's what you're sharing too, Megan, is that, I think firms like ours need to add more value than that in our clients' lives, especially as technology evolves, as capabilities and trading and the costs of investment management, changes. I personally believe you have to be doing more than that. And I also think not only as a firm should you do that to continue to exist, but it truly is in the best interest of the clients to be thinking a little bit broader about their, entire financial plan, their plans to retire, their desire to not run out of money. Do they have their estate plan in place? Or do they have a tax strategy? Are things efficient in that manner? It's not a requirement. A firm doesn't have to do that, but I do think it's important to add the most value. And as you said, Megan, we're not saying we're the expert in all of those areas, but we have the relationships to be able to pull in the experts.
Well, there's no question. I think I would add to that. As our clients evolve, their needs evolve. So in the beginning, when you're working with people when they're maybe younger, like when I started the firm, they're in an accumulation phase. They're just starting to build their wealth that don't have a lot of complexity to it. And so we're focusing on investments and portfolio activity and helping have, hopefully more movements forward and less backwards as markets introduce that random up and downness, if you will. But over time, if we didn't adopt and add these other services, I think we would have fallen behind, because some aspects of the business have become a commodity, which is never a good way to have profitability. And so you've got to adjust to that. But also just being there on the other side of that email or phone call for clients to help solve problems, not only is it in their best interest, it's very rewarding. And if you can do some of that in-house or reach out externally to centers of influences or other partners, you're doing a great service. And I think it also translates into you actually, wind up managing more assets because you're solving more problems for the client. So there's no question. And, to a point, like our affiliate partner, Carson, they have an advanced planning solutions team. And this year, we reached out to someone in that team that has deep experience working on a very sophisticated multi-generational estate planning thing. That's not something we do on a regular basis. So you really need to go to a source that's part of their wheelhouse of specialization. Those are just some of the things. It makes sense. At the end of the day, it just means more business, more successful, happy clients, and hopefully, a happy, successful advisory practice.
So to wrap things up a little bit, Kevin, do you have any other thoughts on just the growth of the firm as far as internal processes, like financial books or the cybersecurity that we now have to be very mindful of?
Yeah, that's an excellent question. And this is a big issue, right? Especially as we add more people to the firm, whether they be employees or partners, by design, more clients to the firm, that increases our need to be ever more vigilant with regards to things like cybersecurity, our CPAs that we work with in various capacities for our own internal purposes, whether it be the private funds or the business itself, they need to be up to speed on this stuff. So you really need to be ever careful of compliance and being I think, have the tools in place and the software and the individuals that have a command of that to run your own business successfully, so then you can concentrate on the client portfolio. So, that definitely changes, and I don't think it never stops changes. We're always got challenges with the changes in technology and especially the security aspects of it.
There's always evildoers out there, always.
There are always evildoers, right? So I think that probably brings us to a wrap-up for this episode. So I notice you two have your energy drinks. In my day, we brought our own Tang.
Tang? Okay, Boomer.
If you're a client and you have any questions, please feel free to reach out to any of our team members directly. If you're an advisor or in the industry and you would like to have a conversation, you can reach us at info@lanebrothers.com.
Thanks again for joining us on another episode. On the next episode, we're going to dig in a little bit more into what the client experience will be like, you as our clients would notice as we're going through this succession. So join us next time. Take care. Thank you for listening. Find all Succession episodes on lanebrothers.com/podcast. If you found any portion of this episode helpful, or share it with a friend. The opinions voiced in Succession with Kevin Lane, Joe Allen, Megan Lane are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine what may be appropriate for you, consult with your attorney, accountant, financial, or tax advisor prior to investing. Guests on Succession are not affiliated with CWM LLC. Investment advisory services offered through CWM LLC, an SEC-registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors.